This program is brought to you in partnership with the Central Bank of Nigeria. Welcome back to Business Daily here on Trust TV. Yes, I'm smiling because somebody decided to join us in the studio today after a very long time. One of our staples. Good morning, Dr. Bashayi. Thank you for joining us in the program this morning.
It's always a pleasure.
Yes. Thank you. He has his own good news, but it's a private good news. So, anyways, congratulations on that front as well.
Thank you.
Now, we're going to play a video from clips now. Yesterday we wrote part of that video without the voicing, but I'm going to play that video for you now. It's a speech by the Apex Bank's governor, Cardoso, where he was talking at the National Economic Council conference that took place again on Monday and Tuesday of this week. And he made some very, very important things. But, we're honing mostly on the part that has to do with the topic, which is the impact of politics on the economy. He mentioned something there. I want to maybe just go a bit and not talk about something that's around that thing that he said. But generally had some very, 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 very valid points in that speech. I think there's so much to unpack from it, but we'll just touch some key areas of that speech. So let's take a look at that.
Risk we must manage, and I thought this is a very important slide. Liquidity overhang. There's a lot of liquidity that still remains within the system, and we've got to manage this very, very carefully. So we are not out of the woods yet. The election cycle, typically election cycle, a lot of money gets pumped into the system. This has to be watched to ensure that it does not destabilize and challenge the very, very bold reforms which have brought about stability to the economy. The global trade tensions, I won't say too much about this because I know everybody in this room follows what has been happening in the recent past with global trade tensions. The limits of monetary policy, I will say here that monetary policy is a necessary but insufficient tool. It can take us to where we have gotten to now, but it is no substitute for the fundamentals. No central bank can sustainably deliver low and stable inflation alone, where structural drivers such as food supply shocks, high energy and logistics costs, and infrastructural deficits are large contributors to price pressures.
All right, Doctor. I know we moved away from just the part of the election and went a bit down. And that's because he said something I know you keep saying on the program anytime we have you about the monetary policy and how it's not the only thing that works. And right here we're seeing Cardoso actually, agree with you that monetary policy in itself cannot be the only thing that would work to put the country forward.
So, that's exactly what it is. The CBN will continue to use the monetary policy tool because that's what they have at their disposal. But that tool alone cannot be the only tool that can put inflation at bay, right? And he admitted it, for sure. So what I used to say then was the fact that we're overflogging the tool at the disposal of the CBN, where we kept increasing the monetary policy rate, we kept jacking it up and all of that. While it does one part to fix, to try and put inflation at bay, it's not the only thing because there are also fiscal elements that need to come into play. Our inflation was majorly driven by food inflation and headline inflation. And headline inflation is driven by FX, foreign exchange rates, right? So what has happened in the last couple of months is that we've seen stability in exchange rates. Predictability is what investors are looking for. The rate is not really the real problem of an investor. It's the stability. So if I bring in my dollar, my dollar at 1,500, when I want to repatriate my funds, and dollar suddenly goes to 1,800 or 2,000, becomes a problem for the investor. But if it is the same 1,500, it's good, all good. So whatever profit I make in Naira, I can convert it into equivalents of dollars, and I have made profit whichever way. So this is the key issue. So what the CBN governor has reiterated is the fact that, yes, we have used the tools at our disposal, but we've also seen some movement in the positive direction around the other elements that come together to help put our inflation in check, which is what he talked about sudden shocks in food prices, energy costs, and infrastructural deficits. These are three elements that would significantly impact whatever the inflation number, irrespective of how the CBN operates the monetary policy tool.
Okay, you took us to FX. So now, yesterday on the program, we had one of our top stories, which was on the CBD now extending liquidity to the BDCs of $150,000 weekly. Now, when we listened to that whole speech from the CBN governor, he listed about so many things that have happened, you know, the great reforms and the great strides and the great benefits and positives of that reforms. And the question I have is, do you think with this, because one of the reforms that took place in the BDC sector, where they reduced, you know, a lot of things from them and said, okay, let's have this market, but now they have the access to now come into directly to the CBN and get this monies. Do you think that would in any way have an impact on this great strides that we've made so far? Would it affect the FX? And do you really think that the BDCs are going to comply with these rules put in place, or if you don't finish selling it, return it back? All those things.
So, talking about the BDCs are a big pocket, as you may want to. There's no amount of FX you put in there that can ever be too much. It has always provided the backup for what you don't get from the official windows. So, even when we had the CBN give out FX, it has never been enough. Right, the BDC has always been that complementary part of the market that has always shown up when the chips are down. All right, so the supply to the BDC, for me, I support it, and that makes availability more. You increase availability, because one of the real issues in the FX rates is availability. Think about it. The higher the demand, they lower the supply. They lower the demand, they higher the supply. So it's a case of when there is so much of it, nobody cares much. But when there is so little of it, everybody is suddenly interested. So once you have significant availability, you've seen the rates have continued to go down. Not as sharp as it used to go up, but there's a level of stability and a level of predictability. So if we keep having availability, chances are very high that we're going to continue to have a continuous reduction in the rates, and the pressure will continue to come down. Remember, the things that used to take a lot of our FX was import of petrol, refined petroleum products. Today we have refining in country. So if Dangote, the Dangote refinery giving us petrol in Nigeria, has reduced a portion of what would have use our scarce FX to go and bring in. And this is some big quantum of FX, by the way. So that has reduced some pressure. And as long as we continue to embrace what we have locally and reduce imports of petrol, refined petroleum products, we're going to continue to have an easing of the pressure on the FX. So I will advise anybody that's still hoarding FX at home, guy, bring it out, because it's no longer good for business. Keeping it continues to reduce its value every day. I think the CBN governor has also said the same thing. People were hoarding because they were not sure it was going to spike up or so. It doesn't look like there's going to be any spike anytime soon.
It's coming down, but it's coming down. It's currently less than 1,350 as of yesterday, if I remember correctly. However, this is
at the official window, by the way.
Yes, but this is mostly due to the trade tensions, global trade issues happening, people trying to move away from the dollar, trying to break with the dollar. That's what this is mostly looking like. So what happens when the dollar picks up again? Because we can't say that this stability that we're seeing, or this downward trend, or where the Naira is actually gaining, is because of some reforms that we have in place. This is mostly due to global trade tensions.
No, so I don't agree completely.
Okay.
Because the easing of our rate spikes started before the global tensions.
Okay.
Right. So you wouldn't allude that. The global tension might only have accelerated it, but not responsible completely for it. Okay. We've had some level of stability. Remember, we got up to close to 2,000 Naira to a dollar.
Okay.
And then we came down. So the global tensions are there. They will have only maybe accelerated a bit. But then the work had already begun before that even came in.
Okay. Yeah. All right. We've dwelled on these other issues, and we're yet to even touch the topic of conversation today, which is the impact of politics on the economy, Nigerian economy. And as you heard from the president, rather the governor of the central bank, where he's saying that, hey, liquidity, because if actually that video didn't start off at the right place, started dangers to look out for, and it says liquidity, and of course lots of naira is going to be pushed into the system due to the elections. Now, why are we talking about this? Over time, in the course of the program, we have people come, and I keep on mentioning, it's a pre-election year. There's a pre-election year. This is going to happen. I said, okay, let's look into it. What is going to really happen with the elections coming up, with the campaigns going to take place? But a brief look into what we're talking about. Politics and economics in Nigeria are deeply intertwined. From exchange rate stability, we're back to that again, to investor confidence, political decisions shape economic outcomes. Election cycles often bring uncertainty, investors slow down commitments, capital flows weaken, and markets become volatile. Political instability can also strain fiscal discipline with increased government spending and borrowing ahead of elections. Security challenges linked to political tensions further affect agriculture, oil production and trade, feeding inflation and slowing growth. At the same time, major economic reforms from subsidy removal to tax restructuring are fundamentally political decisions. Their success depends not just on economic logic, but on political stability and public trust. In Nigeria, economic progress is not just about numbers. It is about governance, credibility, and consistency. Now, before just the topic itself, the impact of politics, and I know you're one of the people that keep saying this when you come on the program, oh, it's a pre-election year, it's a pre-election year. Help us understand what that actually means,
So, in Nigeria, politics is expensive. Make no mistakes about it. So the roadmap to getting into a political office is a very tough terrain. It's a very expensive journey. So what that means is that money is going to get spent, whether by the aspirant himself or by his political party or by his associates and so on and so forth. So these indices will not be, you can't rule them out as quickly as you can think. Now, what that means is that money is going to exchange hands, whether in campaign logistics or in party funding or in whatever way or form, money is going to get spent. That even the Electoral Act has to admit to the fact that there has to be spending limits for each position and all. That means there is an acceptable rule that money will be spent. Nobody's going to get into political office without spending money. And this money, in most cases, is going to move in cash. Because there is some level of secrecy that goes on with some of this spending that if it goes through a normal banking system, things can be traced. Cash is difficult to trace. So when political spending happens, most of the time it happens in cash. And that means money needs to move in bags and Ghana must goes and in boots of vehicles. That means you're going to have a strain on the bank's vaults, bringing out that much volume of cash. It's going to come with more logistics costs in terms of movement of currency. And then most importantly, it's going to come with the attendant issues of lack of transparency in the spending. Okay, so you have to deal with this. In 2022, prior to the 2023 elections, we had that issue where we had a cash constraint. You saw what happened. You saw what went down. Yes. So people were forced to do electronic transfers. It reduced how much cash needed to move, but then it also exposed to the authorities how much money moved within that period, which was unlike when you had lots of cash available and all of that. So what the CBN governor said is very correct. People have been hoarding cash because of a time like this. So our banks don't have enough. The CBN is forced to print more money or to get in more cash into circulation because as it's coming, it goes. you notice that even the trading of mints is also a big business, right? Because you have to produce new monies to put into circulation, but it goes through some windows, and so it's not a very straight journey. So elections are expensive, and election logistics and elections cost, most of the time the spending is in cash. That means physical money has to be available. And when that physical money is pumped into the system, which is in large sums, it can destabilize the equilibrium that we already have. It can trigger inflation, and it can do a couple of things. But the good thing is, it doesn't last for long.
But then the effects last beyond just the election
Well,
cycle.
yes, the effects could last, but then the timing at which these things happen is a very short window. So the short window comes and goes, and if the reforms that were made is very solid, it should be able to absorb the bulk of the shock.
Okay.
Not to say it's not going to happen, but then the shock will be better managed with an anticipation that this is going to happen, so we can plan towards it. So the good thing there is that CBN is planning towards it, so they can put in measures in place to ensure that commercial banks are not doling out a lot of cash to certain individuals, and then pumping up the system with lots of cash.
The CBN tries to do that. They try to do that, but let's put this in place, let's do that. We saw what the cash crunch did in 2022. Some people had to, go to the great beyond due to certain Nigerians' impatience and all that, But these things have happened. How? Because when we say politics and economics are intertwined, I don't have to get into how is the CBN going to make sure that the money is not used to do that. I can't delve into that. That's not what we're going to go to. Yeah. But let's look at how sensitive our economy is to political uncertainty. How very sensitive is Nigeria's economy?
So Nigeria's economy is very vulnerable to political uncertainties. That's because the things that can trigger economic uncertainties or instabilizations are linked to politics. So movements of funds can trigger our fragile state of inflation numbers today. We are sub 15%. So that is a very fragile position still. And by the time you put in some elements around cash availability and cash pumping into the system, it can trigger that. And these are political decisions. Politics is going to happen. Elections are going to happen. You can't change that. And you cannot change what happens with elections. So you see, while you're trying to maintain a stable economy, you cannot postpone the election or cancel the elections. So it's something you have to manage. And that's where the CBN is already trying to. Now, remember, the CBN is independent, meaning, well, in the books, it's supposed to be independent, right?
Okay.
So independent means it should be able to independently take decisions that is believed to be in the best interest of the economy, irrespective of whose ox is God. But the CBN governor still reports to the president anyway.
Okay. So that's why when you said it was independent,
So in the books, the CBN governor should be able to take a decision that is best in the interest of the economy, not necessarily whether the president completely agrees or not, but as long as it's in the best interest, it should go. That's the level of independence it should have. Just like you have the INEC. The INEC chairman declares a winner, irrespective of whether he doesn't need to consult the president in office at the time. If a winner emerges, he has a responsibility and a duty to independently declare a winner based on the results and everything. So it's the same thing that is supposed to happen with the CBN. But there's a lot of, over the years, we've seen a lot of political interferences. So, but we're hoping that the CBN will still do what is necessary to manage the situation as best as possible.
Maybe possibly to take away the political interference will be a case of it not being an appointed position for the governor, and maybe grow through the ranks and then get to the place of becoming the CBN governor. That way.
So it doesn't insulate much anyway. I mean, think about how, I give you an example. In the hierarchy of the civil service, the most senior position is that of the permanent secretary. Can you objectively say that it's the best man for the job that eventually becomes a permanent secretary representing his state? Not necessarily. So remember, every state must produce a permanent secretary. So there are political calculations around that. So there are also political interests at play. Meanwhile, these are career civil servants. These are people that rose through ranks to level 17, put in 30 plus years into their career. By the time you're getting to a director level, you're already at the peak of your career. You're almost on your way out. So you can't insulate those things from politics. You cannot say we should have a separate election to elect the CBN governor. That's not going to happen. Somebody's going to appoint him. There could be criteria that ensures that there is little or no interference into how he emerges, but somebody has to sign.
Okay. All right. Now, we talked about the spending earlier, about the whole election cycle spending. And one of the things, that it's important is we're so seemingly on a disinflation trajectory right now. Will this in any way worsen inflation?
The political spending?
Yes.
Yes, that's the fear. I mean, because we're in a very vulnerable position, that can tinker with that number for sure.
That can.
Yes, it can impact on our inflation numbers.
Okay, now let me now take you to seeing that that's a possibility and hearing what Cardoso has said about the liquidity and elections. Do you think that in any way will equally affect their coming together when you have the MPC meeting?
Well, the MPC meeting, remember, it just focuses on monetary policy, right? Which is just one aspect of how you manage inflation. Okay. Remember, it is not the only tool that helps manage inflation. It's the one at the disposal of the central bank. So I don't think they should focus more on the monetary policy side to be able to tame inflation that is anticipated as a result of election spending. My recommendation would be keep whatever you're doing constant and let the fiscal side be looked into by the people that are the players in the area. Because think about it, when there's more money. Okay, I give you this scenario. When you increase minimum wage, prices of goods in the market also go up. Not because the cost price of tomatoes went up suddenly, but because the value chain suddenly feels we should get more money from the public now that they get more money. So there's an artificial increase in price, not because the cost of inputs have increased and so on and so forth, but somebody feels that the workers are not getting more money, let's also get our own share. So if there is a win that there's going to be increased money in circulation because of elections, some of these price changes are going to happen just because somebody wants to also get his own share of the pie. Okay. That's it.
All right. Now, let's look at one of the things that happened equally during the election cycles, FDIs. Now, you've heard from him at the later part of that whole speech about the remittances, which in itself helped our FX reserve. He said that they did a great job in helping our FX reserve. What do you think? These election cycles and, the elections coming up, how is that going to impact FDIs and all this diaspora remittances coming to the country? So
we should expect to see a little more. Just like you get more remittances towards Christmas, people need to send gifts to family and friends. We'll expect that some people will need to send money to family and friends who are either contesting elections or have some interest in some of the electoral maneuvers that are going to happen. So my expectation is that we should see more. Good, whether it goes, whichever way it goes, it benefits the economy because it makes availability more, and it also helps to cushion some of the impact of the pressure that comes with respect to FX unavailability. So that's what I think. But then it also comes with a lot of uncertainties as well. Some people feel it's an election year. Power may change hands. So policy instability is also a fear in the minds of investors. So while you're thinking things can go well, if there's a sudden change in government and a change in policy can cause a policy somersault. So people are cautiously optimistic. Some people will send in money for elections, but then some people who want to bring in money for investments and big ticket investments will want to also be careful because an election year to see how it pans out first before they make any major move.
Now, our debt position, how vulnerable is it to political pressures?
Very vulnerable because remember our FAC allocation, almost 50% of it goes to the subnationals, right? And then with elections coming, some subnationals also borrow. So there could be increased borrowing at this time from sub-nationals. At the national level, you might not have a lot of it to fund the election, but you could have some very frivolous kind of debts being added to our current debt burden. Okay. But then you would most likely expect a whole lot of it from the sub-nationals, most likely.
Okay, so again, we're going to go back to that video from him. He's talked about the fact that they now have more coming to them and expect, to do more. But then yesterday again on the program, one of our top stories were talking about the fact that states' foreign debt has now increased. Is there a way? Because in as much as I know that we have subnationals. Maybe the American way of doing things is a federal, and then there's a state, and everybody does their things separately. But is there a way that there could be some sort of cap as to how much you could borrow, so as not to put your state in some sort of penury when you're out of office? Because, as you say, they're going to probably go out borrowing to do some thing for campaign reasons, maybe do a road that they were supposed to have done for the past 5 years and didn't do, or so. All these kind of things might come into play or happen. So what can be done to stem that? I know that we have separation of powers in itself, but is there something that could be done to not put some of these states in abject poverty and penury? Some haven't still started paying 30,000 naira minimum wage, and we're already at 70,000.
So I look at it from two different angles. As an employee, for example, if you earn 100K, that is how much money a bank can lend you, being that you have a stable employment. And all.
Yes.
By the time your salary goes to 500K, which is 5 times more, the bank is going to be willing to offer you more. Right? So this is the scenario of the state government. So if you used to earn, say, 4 billion in a month, now you're earning 24 billion. The institutions that borrow can borrow you 4 times what they could borrow you before. What that means is that these guys now have more leverage to borrow more money. Unfortunately, the federal government cannot make the laws for the state government. There's a state house of assembly that makes the laws for the states. So if the state house of assembly does not make a law that caps how much we can borrow, there's nothing the president can do about it, unfortunately. The National Assembly makes laws that bind on the federal government and the nation, but there are state laws, all right? Except where you have a conflict between what the state law says and what the federal law says, and what is in the Constitution, because the Federal National Assembly makes the laws that go into the Constitution and all of that become a binding law. Except that happens, the state House of Assembly primarily has a prerogative to decide how much should be borrowed, how much cannot be borrowed. And from my experience, that these days there is really no state house of assembly that can really stand against the governor, unfortunately. Oh,
well, that's a very heavy one there. Okay, let's look at outlook and, projections. 2026, 2027 is here. What do you have to say?
So the outlooks have been very positive. From many of the quarters, the IMF, the World Bank, the African Development Bank. The consensus is around Nigeria's growth will be somewhere between 3.5 to 4.4%, which in my opinion, I think is very realistic, conservative. We have an election year, so we don't know what it's going to throw at us yet, but then with that cautious optimism, I think it's something that is still doable. Remember, we've had a shrink in our economy, so we're basically growing from a lower base. So a 4% growth, a 4.4% at the tops is also a very realistic growth number. We need to stay the course, keep working on insecurity, ensure that it continues to go down, continue to support farmers to grow more food, continue to keep energy costs at optimum levels so that we don't have a spike in logistics costs moving food, and then keep the exchange rate as stable as possible so that we don't have headline inflation spiking. We keep those, we will be able to have the things that can throw surprise at us at bay while we focus on growing the economy. We hope that the interventions of government will continue to to stimulate the economy as much as possible, create more jobs, enable industries to produce more optimally and profitably as well. then we should see that growth number come through.
All right, thank you so much, Dr. Bashayi, for your insights on the impact of politics on the Nigerian economy. As you've heard him say, and of course, as we said earlier, even the CBN governor has said it himself, money, the economy, politics in Nigeria, they go hand in hand. They're threaded there together. So, and these things have the impacts that they would have on our economy. But away from all the maybe negatives and the cons, there are pros too. Maybe you're out there, you could find somehow, somewhere you could plug yourself into this train of the election cycle, and maybe, you know, for the campaigns are coming up, and see, maybe you can make some money during this period. I believe that that's one of the important pros of the election cycle. The fact that so many things come up, so many opportunities come up into play.
Yeah, the lawyers will make more money for sure.
Okay, all right, so that's it for Business Daily this morning. That's the much we can take. Same time, same place tomorrow. I am your host, Chiamaka Nwafor. Have a great day. This program is brought to you in partnership with the Central Bank of Nigeria.